Hey everyone, welcome to Money Soup, a dumb name for a dumb channel where I talk about all things personal finance. I am so excited that you're here. It is a brand new YouTube channel, which means we're going to learn a lot. You're going to learn how to build your financial future. You're going to learn about credit, investing, the stock market. You're going to learn how to plan for retirement, how easy it can be to end up with a lot of money if you just start early. And I'm going to learn how to get dozens of YouTube views. Let's get started. Well, it's the first thing that comes to mind when you think about being an adult, right? Building credit, having a good credit score. What does that mean? How does it work? And more importantly, why in the world should you care? Let's start with an analogy. Let's say your neighbor knocks on your door and he wants to borrow your brand new lawnmower. Do you let him? Well, that depends on if you trust your neighbor or not. Has this neighbor ever borrowed anything from you before? And if so, did he return it on time? Would you rather lend it to somebody who you've known for 5 weeks or 5 years? The point is, if someone wants to borrow something from you, they have to show you that you can trust them, right? Well, building credit is exactly the same thing. It's a way to show banks and other companies, which we'll talk about in a minute, that they can trust you to make payments on time. That's all it is. Somebody with a good credit score likely got that through a long history of making payments on time consistently. And somebody with a lower credit score could have gotten that, well, for a number of reasons. You could be brand new to the credit game. Maybe you don't have a long credit history, or maybe a global pandemic swept through your town and you lost your job, and maybe your last credit card payment was a couple days late. Either way, having a low credit score doesn't mean someone's a bad person. It just means the bank has trust issues. And it means there's an opportunity there to build trust with the bank and show them that they can trust you to borrow money again. And we'll talk about some of those techniques in just a second. But first, you might be asking yourself, why do I need credit? Maybe you're somebody who can afford to buy everything in cash, and maybe you've been told that credit cards are evil and you never want to touch one. Is it still important for you to build credit? The answer is yes, absolutely. And I'll tell you why. If you listen to certain financial gurus out there, you might think that having good credit is evil.
I mean, stupid on parade. That's what this is.
You might think that the only way to get a good credit score is to be severely in debt.
Swipe it, swipe it, swipe it, swipe it, swipe it.
And it's just not true. And not only that, your credit score is used for so much more than just giving you a credit card or giving you a car loan. Almost every company that you try to start an account with, they're going to check your credit because, again, it's not a debt score, it's a trust score. A great example of this is landlords. Every time I've ever applied for an apartment, they've done a credit check. And a good credit score, it not only helps you get approved for a new place, it may also give you a lower deposit. Another example of this is the electricity company. When you move into an apartment and you start an account with the electricity company, they do a credit check. It saved me $100 having a good credit score because I didn't have to put down a deposit. The same thing is true for cell phone accounts. Even if you don't plan on financing a phone, when you start a plan with a new cell phone provider, they do a credit check to make sure you're going to pay your bill on time. A good credit score is crucial, not just to get approved for credit cards and loans and cell phone accounts, but also to save money. Banks tend to charge you less. Companies tend to charge you less if they can trust that you'll pay your bill on time. All right, so you know how credit works. You know why it's important. Let's talk about the credit score. What makes a good credit score? What goes into calculating a 350 versus an 850? And how can you make sure that you are getting the best credit score possible? Well, to answer that, let's go to the source. The most popular credit scoring method out there is the FICO score. The FICO score is the score that the banks are going to check for a car loan. It's what the credit card companies are going to check when they issue you a credit card loan. And it's what your landlord's going to check if you apply for a new place. So if we go to myfico.com, they break down exactly what goes into your FICO score. So as you can see on the website, there are 5 different categories that are considered. The calculations are a little more complex than this, but this is a really good basic overview of how they calculate your score. So the largest category they consider is payment history. That's 35% of your score is just payment history. It's exactly what it sounds like. It's do you make your payments on time? If you ever look at an app like Credit Karma, or if you go into your credit report, you'll see every single payment you make on every single account. And if even one of those payments is, more than a couple days late, it can really affect your credit score. It's super important to always pay your bills on time every month, no matter what. The next category, coming in at 30% of your FICO score, is amounts owed. This is how much money you owe different banks and financial institutions. The more money you owe, the less likely you are to get approved for new credit. That's because the banks see you as a risk if you owe a bunch of money. The best rule of thumb is on any credit card, try to keep your balance below 10% of your total credit limit. That means if you have a credit card with a limit of $500, you really don't want to spend more than about $50 a month. And this is super achievable if you just use the card once a month for maybe a tank of gas or a meal out, and then pay it off at the end of every month. The next category, coming in at 15% of your FICO score, is length of credit history. So this is how long you've had credit established. The longer you've had credit established, the older your oldest account is, the more likely you're going to get approved. You've proven to the banks over time that you can consistently make payments. The next category, coming in at 10% of your FICO score, is new credit. So have you established any new lines of credit in the last month or two? If the answer is yes, you might be less likely to get approved for new credit, and your FICO score may be a little bit lower. You'll notice every time you open a credit card, your FICO score will go down just a little bit. That's not a bad thing, but it does mean you're less likely to get approved next week if you just opened a credit card last week. And finally, coming in at 10% of your FICO score is something called credit mix. And what does that mean? Well, there's different types of credit accounts. There's credit cards. That's called revolving credit because the balance can change from month to month. And then there's something called a fixed loan or fixed credit. And those are installment loans such as car payments or house payments. And those start with a principal balance that you pay down over time. There isn't one type of loan that's better than the other. There's no type of credit that's better than the other. They're just different. And banks want to see that you can handle paying back different kinds of loans. Now, again, this is only 10% of your FICO score, so don't go out and get a mortgage or a car loan just because you think it'll boost your FICO score a couple of points. It just means that the more types of credit accounts you have, the more likely you are to get approved for new lines of credit in the future. All right, so you know what makes a good credit score. You know why building credit is important. How do you get started? What do you do if you've never had a credit card before and you're just starting from scratch? Well, it's kind of a catch-22, right? The bank's not going to loan you money unless they can trust you. But how can they trust you if you've never borrowed money and paid it back before? Well, there's two ways to do it. One is the more traditional, old school, do-it-yourself way. And the other way is kind of a life hack. I'll explain that one in a second. Now, the first way, the traditional way, is by getting what's called a secured credit card. A secured credit card is just like a regular credit card. It still has a credit limit. The difference is that limit is secured by a deposit. So if you want a secured card with a $200 limit, you have to start by giving the bank $200 to protect them in case you don't pay the credit card bill on time. That's how they can trust you, even though they've never extended credit to you before. Now, the good news about the deposit on a secured card is after about a year of on-time payments, you get that money back. So if you give them $200 to start out with, after about 12 months, you'll get that $200 back and you'll have never paid a dime to start establishing credit. Now, the second option, it doesn't require a security deposit, but it does require having someone you trust that already has good credit and pays their credit card bill off every single month. It's called the authorized user method. And all it entails is you find someone you trust, could be a parent, could be a sibling, that has good credit and that pays their bill off every month. You want somebody who's responsible. They can add you as an authorized user on one of their credit cards. When they do this, a crazy thing happens. That credit card goes on your credit report. The bank thinks that you're the one paying that credit card bill every single month. Now, you never have to get a physical card in the mail. They can keep that credit card. They can shred it. You never have to see it. But just by adding your name to that credit card account, it's building your credit every time they make a payment. So as long as you find someone you trust, somebody who has good credit that can put you on their account as an authorized user, it's a great way to avoid having to put a security deposit down for a secured card. After you've been an authorized user on someone's card for about 6 to 12 months, at that point, you'll be able to apply for a regular credit card on your own using your social security number, and chances are you're going to get approved. At that time, once you get approved for your own card, they can take you off as an authorized user and you can just go your separate ways. All right, so now you did it. You followed my advice, you got a secured card or you were added as an authorized user, you built your credit, you finally got your own unsecured credit card, and you're in the 700 club. Your credit score is looking good. How do you keep it that way? What do you have to do to maintain a good credit score so that if you ever want to buy a house or buy a car, you get the best possible rates? Well, my advice is going to come once again from myfico.com. The best way to maintain a good FICO score is really, it's two things. Make those payments on time. Make sure you never have a late payment on any account. And number two, keep those balances low. ideally, you want to pay off your credit card every single month. The way I do that is just by treating my credit cards the way I would treat a debit card, pretending the money comes out of my bank account every time I swipe that card. As long as you're just using it for gas, groceries, bills, things you'd pay for anyways, you're going to be just fine. Make sure you pay off that credit card bill every single month and do not go into credit card debt. That's something I really want to stress. Credit card debt and credit card usage are two very different things, and you don't need to go into debt to keep a good credit score.
Swipe it, swipe it, swipe it.
I can promise you, just by keeping your balance low and paying it off every month, you are going to have the best possible FICO score that you could ask for. And there you have it. Hopefully I answered every question you could possibly ask about building credit. If there's anything I didn't get to, or if you have a topic suggestion for a future video, tell me in the comments below. If you liked the video, give it a thumbs up. And of course, feel free to subscribe for more personal finance content. Thank you, as always. We'll catch you next time.